First question is, Shane, how do I find the best syndicators to put my money with? That was kind of paraphrasing it. And then the second question is, do I like mobile home parks? So I'm going to answer both those questions. And unfortunately, just with the amount of people that are kind of reaching out these days, it's not practical for me to get on the phone for 20 or 30 minutes, even if oftentimes people say, can I just have 10 minutes or 15 minutes of your time? For me to properly answer the question, I want to think about it. I like to not rush. And so I think that answering these questions on the podcast is a far better use of my time and hopefully of yours, because I can put a little more energy and effort into it. So, okay. So here's the first question and I'll go through it one more time. So Shane, like, I have money. Who or how do I find the best syndicators to invest with? And what I'll say is, like, there's no like one way to do this, but if I was in Sean's shoes, how would I go about finding syndicators? The first thing I would do is commercial real estate, and I'll just kind of broadly say this. In my experience, the best syndicators are rarely trying to actively promote themselves. Like they certainly do need to raise money or generally are looking to raise capital, but it's generally from a pretty tight network. And friends and family. So to kind of get into those circles, my first suggestion would be like asking friends and people you already know, likely that have money, and asking them like, hey, are you actively or are you investing in private syndications right now or private real estate deals? And just try to get a sense, right? I mean, if you talk to 50 people, they're more than likely one of those people has either had an experience, and if it's good, then go down that path. If it's bad, same thing. I would still kind of explore like what was bad about it. What is it? The people? Was it the deal? Was it the timing? What asset class? I think the more you can educate yourself, the more you're going to feel comfortable and confident in terms of like determining who it is that you want to invest with. And I just want to preface this, like, none of this is investing advice. This is just like how Shane would do it if I was starting over and I was looking for someone to invest with. And I can tell you that in the past, I'll use this as an analogy. So if I was to invest in like oil and gas, right? Like a startup or a company, because a deal maybe came across my desk. And this has happened to me in the past, and I lost money, and is why I don't do it anymore. But when the deal came across my desk, I went and talked to a few of my closest friends that I trust. And I said, here's the opportunity, have a look at it, tell me what you think. And I didn't really get like good or bad. It was essentially just the facts of the deal. And what I really should have gone deep on is who the person was behind the deal, because that particular investment, the individual that was backing it was, in my opinion, like all he cared about was how he was going to do. He really wasn't focused on how his investors were going to work out. And in my, like, that to me is probably the most important thing. So you're really looking at who is the individual, and the only way to really get to know that individual is through relationships, through creating that relationship. And as I was kind of thinking about Sean's question last week, and I was kind of listening to a podcast, one of the ideas that came to me was, one of the great things about my podcast is it's allowed me to build a broader network, and I can start to have more and more conversations with people for a longer time. Number one. Number two is I get to know them. And then if I need to know someone else because of the network I'm creating with my podcast, they can introduce me to someone, or they can say, yeah, you know what? I had a interaction with John, and he's someone that I would trust, or he's someone that I would consider trusting, or you know what, I don't know if I would want to do business with them. So a podcast, whether it's you just passively listening and then searching, like, you can go on, there's probably 500, real estate or commercial real estate podcasts that are out there. you get a sense as to who that individual is. What are their values? What are their standards? How do they conduct themselves? What are their beliefs? And I would probably try to listen to 4, 5, 6, 10 of these podcasts. Oftentimes, if someone is trying to raise capital and they're going on the podcast circuit, if you will, they're probably going to be on multiple podcasts. And so you can start to get a sense as to who they are. I mean, taking it one step further, if you had even more time, create your own podcast, invite them onto your podcast and ask them questions, right? Like, for example, Sean, when he reached out to me, it was going to be a one-to-one conversation. And frankly, those are not, they're not very scalable, right? And, you know, like I mentioned, I get a lot of those requests. So it's very difficult for me to carve out the time to have 20 conversations a week with people that just want to pick my brain. If Sean had come and said, Shane, I'm just using this as an example, right? Because I actually had someone else last week say, Shane, I've got a podcast, I've got a show, I'd love to interview you. I'd like to, and he most likely asked the same questions that Sean would have asked. The difference though is I can have that one conversation. I'll ask, I can't remember the gentleman's name that because he came on my podcast as well. He'll be coming out. Charles, I think is his name. Anyways, I can take that podcast, I can repurpose it. And so it lives on versus a phone call that as soon as it's done, that's it. And frequently I find that those short phone calls really don't go anywhere, right? Because in 15 minutes, I'm not going to be able to impart any kind of, you know, wisdom that's going to most likely change someone's direction. But I think this podcast, especially because he can re-listen to it, is going to be far more impactful. So the first one is networking. The second one is podcasts. And podcast is really just a kind of a fancy way of networking. The third is I would be looking on LinkedIn. There's a lot of people that share, you know, really kind of interesting, I would say LinkedIn and even Twitter. There's a few people out there, what's his name? Nick Huber that I follow. It would be just as an example, right? He's into self-storage, but you can start to like figure out what people think based on what they tweet, what they're not to say that it's all going to be, they're not putting on a show. Like that's kind of the game, I think. But I would say that at least you're going to start to say, okay, here are a list of 20 people that are in the space that I'm considering investing in. In this case, Sean is looking at mobile home parks. Go on LinkedIn, go on Twitter. Those would be 2 social media platforms and podcasts, and just start to figure out who it is. It's going to take some time, but you know, if you're considering investing $100, $200, $500,000, why not take the next 6 months and really figure out who it is that that you want to follow and listen to? And then the nice thing about LinkedIn is once you connect with them, you can see who else they are connected to, and if there's like common connections that you have, and if you know that person and they know them, then you can start to, you know, pick up the phone and say, hey, I'm considering investing with, you know, Jane or Shelly or whoever it happens to be. And what was your experience? What was your, you know, what you know, anything good, anything bad? If you wanted to get even more, I suppose, like in the trenches, like for me, I would drive around, I would look at projects, I would figure out, I'd pull title, I'd find out who owns those properties. I'd most likely call commercial real estate brokers. What was your experience? How was it when you bought or sold with this person, in terms of whether it was on the leasing side or the acquisition side? I'd call mortgage brokers. I mean, you can go as deep as you want, and it really depends on how much effort and energy you want to put into it. But those would be some very strategic ways about going in terms of finding a syndicator that you might consider investing with. Okay. Now, the second question that he asked was, Shane, do you like mobile home parks? Now, this is a pretty loaded question in the sense that, like, who cares if I like a mobile home park? You know, not to be kind of crass about it, but it really doesn't matter, because at the end of the day, it's like what you want to invest in. And the reason I say that is I might like retail, I might like office, I might like industrial, I might like multifamily, I might like self-storage. At the end of the day, people are making money in all of those asset classes. Like I know, like I hate office for multiple reasons. I've never really understood it or liked it. Yet there's two guys here in Calgary, even in this very difficult and high vacancy office market, that are still pulling like double digit returns because they met with me maybe a month ago and asked if I would consider investing. I essentially said like, look, I'm open to looking at anything, but frankly, this is what I'm focused on. And so I doubt that I would ever invest in your opportunity, but I'm happy to kind of have a look at it. And if I think it would be a fit for someone else, I'm happy to push him your way. The reason I tell you that story is if you have a competitive advantage, if you really understand what you're investing in, you can make any of these asset classes work. And so no different with mobile home parks. And I think what I would have said to Sean if we got on the phone is like, this really comes down to like what I call like your, like I created this back in the day, like your core investing philosophy or your investing philosophy. And I'll just kind of, if you're not on the video, I'll just kind of articulate some of the things that I would ask, right? So I call it like creating your own investing religion. And it's like a value-based investing system. Okay. So when I would ask, when I was a broker, then when I was obviously doing syndications, and then when I was coaching, I'd essentially ask these questions to understand what it was that a person was looking for. Are they looking for cash flow or are they looking for capital appreciation? And it's a bit of a spectrum, right? Because generally speaking, people are looking for cash flow and appreciation, but what is more important? Next would be, are you interested in like, development, distressed, value add, or core, right? Like, and that really is like, what are your return expectations, right? In terms of value add or development or distressed, those might be 20% plus. If you're looking for core assets that are just long-term, safe, low risk, you might be in the 4 to 6, maybe even 8%. Next is level of risk. Like, are you defensive and safe? And this is going to probably be based on maybe your age, how much time you have, how much energy, how much knowledge. And so are you defensive and safe, or are you highly offensive or on the offense, not offensive, on the offense? The type of commercial real estate property. So this is good. Like, Sean identified, I presume he likes mobile home parks, and that's where he was trying to get some confirmation from. And certainly, like, I think there's nothing wrong with mobile home parks. I would really be focused on who the operator is, and do they have like 5, 10, 20 years experience in it? What's your holding time frame, right? 1 to 3 years, or are you looking at 10 plus years? What city are you looking at investing in? And I think once you go through these questions, it will really help to narrow down your own investing philosophy. And then you can, like, as an investor, that I think is going to be even more attractive, because one of the other things that I'll say, if I'm meeting someone new for the first time that just has money and they want to invest, but they haven't really thought through this, as someone that puts these deals together, the last thing I want is an investor that comes in, has expectations that are completely out of alignment with the type of assets that I'm investing in. They may want to get in and out fast, and this one might be a long-term deal. They might want 25% returns, and this is an 8 to 10%, steady Eddie deal. They might be, if I sense that they're flip-flopping or that they're constantly changing their investing approach, I wouldn't necessarily want that type of person in my deal, because it's just going to cause stress for me. So I think the more clarity you have, the more you're going to be attractive to the type of person that you probably want to invest with. So I'm just going to leave it at that. I got to get going. So hopefully this was helpful. This would have been likely, like I said, the 50-minute conversation that I had with Sean. He can re-listen to this. I feel that there's probably at least 1 or 2 takeaways that he'll be able to, and for yourself as well, if you're looking at investing passively, how do you find those right people? And then if you're considering an asset class, how do you run through kind of a series of questions to help identify and narrow that in? And it's not to say that you can't change your mind, right? You might, like, I used to be big on retail. I used to love industrial. But I have you know, really settled in on townhouse built for rent. And so that's just me. Doesn't mean it's right. It just means it's right for me. So that's all.